Yes. I see now. Welcome back to another video, ladies and gentlemen. Thank you guys again for tuning in. Today we're looking at the stock of GLG, and we're going to be talking about this direct offering and just enlightening your mind to what typically happens to those oh so lovely penny stocks. Again, nothing against trading penny stocks, but just want to point this out here for you guys. So let's get into sharing the screen. And here we are. So right now we are looking at the stock GLG. GLG was on our scanners this morning. We even talked about it on our pre-market watch list. A few of our traders in our room traded it today. I myself did not. I was actually looking to trade it later in the day, right around this wedge break. I was looking at it right here, and then I took it off my chart, looked at another stock for just 1, 2, 3, 4, 5, 6, 7, 8 minutes, and then guess what? You missed the move. So that's a perfect example of just how quickly something can move on you and you miss it. That's why you have to be absolutely glued to a stock sometime in order to catch those moves, in which I missed. So let's give you a little bit of background detail on this wedge snap, then we'll talk about the direct offering and the drop. So you have GLG up pretty big on the day, starts to show weakness, people short, okay? So they short. All right, drops out, up a little bit more. It performs what we call a lower high, more people short, okay? And then it drops out a little bit more, pops up, breaks the volume weighted average price. You know, there's probably a few more people that start getting short, okay? And then what happens, it gets bought back up, comes back down but doesn't break, and then we get what we call, and let me delete this all off, we get what we have, a perfect symmetrical wedge break where people short the top, doesn't break down, boom, long bias traders hop in and short sellers get squeezed out to all hell, and then of course they get smoked. All right, so that is the wedge snap. So remember that there, perfect pattern, right? Boom, 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 breaks to the upside, you're long on that particular play, okay? And what you're banking on is that there's a bunch of short sellers in this move that have to get squeezed out and they get pushed. So we were actually following this in our chat room today, and then I got carried away looking at another stock and missed that, but a few of our traders ended up making money on that move. So congrats to them, all right? Shout out to those traders in our room. Now, as we move over, what ends up happening is it ends up getting smoked, just absolutely annihilated. So what you want to do is you want to come down here in the timestamps of the news. Okay, so if you're on Thinkorswim, you can go down here into the news, right? Little bottom right-hand corner says live news, pop it up, and this is going to give you real-time data news. So let me just kind of put this a little bit bigger. So you'll come to find that they did a direct offering. All right, let me see where it's at, where they announced it. Right here at 1447, China Bat Group Inc. announces pricing of approximately 3.7 million registered direct offering. Whenever there's an announcement of a direct offering, it's never good news and your stock will most likely crash. So this was done at 1447. You come over here and look right at 14. This thing starts to tank. 1447 right there, and boom, the thing is just tanking. Now, I wouldn't be surprised if some people knew about the news ahead of time, which you could just look into the filing of the company and know that they were going to be doing a direct offering, so it's really not a surprise. But boom, there it goes, massive drop. So what you have to understand here, just kind of emphasizing the importance, is when you are trading penny stocks and anytime they're having a really good day, just know the likelihood that these companies might do a direct offering is very high. And if they do a direct offering, the first thing you want to do is get out of your position immediately. And by doing so, you're adding to the panic. So what I'm getting at is whenever you're trading a penny stock and it looks pretty good, it's having a really good day, just know that you always run the risk of them doing a direct offering. And that is why I typically never hold penny stocks overnight or throughout the day, is because, well, something like this could happen, right? Let's say even you were lucky to get in pre-market here. Things are going good. Things are going great. Then they're kind of fading out. You're like, well, I'll hold. We still have a low a day bounce, possibly coming bounce, trails off. And then you get hit with a direct offering and everybody starts to panic sell. You just went red on your trade. So that is generally why I will never hold penny stocks overnight. Very rarely do I actually do that, and it's only when I feel very comfortable in the stock and the setup. So just know that a lot of times penny stocks are going to do direct offerings. Direct offerings are a no-no. Now you can actually look into the filing of a company. So if you go to a company's website, so like right now if we go to BAT China Group, whatever, their website, and look into their filings, you'll be able to find that they register to do an offering. Now, they don't actually announce in the filings the specific time that they're going to tell the public that they're doing an offering, but the filing tells you that an offering is on the way, which means you could tread more carefully on that stock. So it's always a good idea to do what? Your due diligence, right? So you always want to dive into the stock and know as much as you can about it before you start trading it. Did I know that they were going to do a direct offering? Actually, I did not know they were going to do a direct offering. Somebody in our chat room had mentioned that they had filed to do a direct offering. So ahead of time, we kind of knew that this might be coming around the corner. So with that being said, guys, the only thing you can really do to protect yourself as much as possible in a situation like this is do as much research as you can on the company, get comfortable with reading company filings. It's really not too tricky. Maybe I'll do a video here in the future about how to do that. It's pretty simple, pretty straightforward. There are some kind of things in there that might be a little confusing. Even I still get confused. But generally speaking, pretty straightforward. But that is the risk. That's kind of your risk involved with doing penny stocks is whenever they're really having a good day, chances are they're going to do a direct offering. And we've seen this on BPTH. We see this on MBOT. We've seen this on now GLG. We've seen this, I think INPX may have done one. I mean, they happen all the time, right? So, and generally speaking, it's because they're garbage stocks and they're doing direct offerings to raise more capital to burn through that money most likely. So just know, whenever penny stocks really start to pick up and really start to go good, what's that smell? It smells like a direct offering is right around the corner. So you get in and you get out and you be happy with your trade. And there goes the closing bell, ladies and gentlemen. Everybody have a great day. I will see you on the next video. Thanks again for tuning in. Like, share the video, and subscribe if you haven't done so already. And we will see you on the next one, as always.